And again, I think you bring up a good point there of Bitcoin kind of growing, especially with this institutional interest. It's more of just a macroeconomic asset. And as we can see from this chart from Ben here, I think we can see some signs of those tides maybe shifting a little bit as well.
Yeah, I think you could argue that Bitcoin is very much tied to monetary policy. This entire cycle has been more so plagued with high interest rates and quantitative tightening for much longer than in prior cycles. And so because of that, it's actually led Bitcoin to really outperform most everything else in the crypto space. Just because in times of uncertainty, you buy what you're most familiar with, what you're most confident in long term. And in crypto, that's clearly by far going to be Bitcoin. So Bitcoin has done very well over the last few years under high rates and quantitative tightening. And Jerome Powell, the chair of the Federal Reserve, has recently announced that they will be ending quantitative tightening in December. So we will probably transition into sort of the next phase of the cycle for Bitcoin. And the general idea with monetary policy in general is they're never going to stop printing money. So fiat currencies are going asymptotically to zero. Therefore, Bitcoin offers a way out of that.
100%. And I think we can also see this, as you mentioned, on liquidity there, by looking at the liquidity versus Bitcoin chart, specifically the global M2 chart. So, Andre, I know this is a little bit of a controversial chart, but can you please share some insights on this?
I'm happy that you bring this up because it's probably the most hated chart right now. So people have been following this chart very closely. It shows a global money supply lagged by 3 months in Bitcoin. And people have criticized this chart because Bitcoin has not been following global money supply on a tick-by-tick basis, right? And I agree, there's more like a long-term relationship between Bitcoin and global money supply, what statisticians call co-integration. And in my view, this long-term relationship still holds. And we did statistical analysis on this. And in fact, these relationships, they tend to mean revert, meaning the farther Bitcoin diverges from the trajectory of global money supply, the higher the probability that it's going to mean revert, that will reverse back to this trajectory at some point. But yeah, it's not, you can't use it on a tick-by-tick basis. And what many people also say or criticize about global money supply is it's actually a derivative of the dollar, because all these like foreign money supplies, like the Chinese money supply or European money supplies, you have to convert them by the exchange rate. So it's somewhat of a derivative of the dollar. But like dollar depreciation or currency depreciation is almost synonymous with global money supply or money supply growth based on what is called the purchasing power parity theorem. So I don't buy this argument that this is essentially just the dollar and that you should disregard this. It's the same. It's a different side of the same coin, essentially.
Yeah, and
No
I
pun
think
intended.
I think leading on from that, another reason that I feel like a lot of investors are maybe a little bit uninterested at the minute. We can see retail sentiment is very low. And that might be due to the fact that we've seen obviously a very high correlation between Bitcoin and other assets, specifically US equity indexes, as we can see here. And recently, as we've said, we've been underperforming. But Root, do you think that this underperformance is going to continue? And do you think that there's any benefits that Bitcoin has acted as such a almost high beta play of US tech stocks?
Yeah, Bitcoin is really seen as a risk asset, which I think is just the phase that we're in. The ETF approval in 2024 was a bit of the beginning of that. The maturity of Bitcoin as an institutional grade asset. We have now BlackRock behind Bitcoin. There's strategic Bitcoin reserves. And so we really entered like a new era for Bitcoin, where I think if you look at the previous cycles, it was more retail. Now we got to a market cap now that the impact of retail capital isn't as influential. Most don't have like an extra 100K on their bank account to acquire Bitcoin, and so that is a contribution to this diminishing returns as well. And the last year we've really seen that we've traded very similar to the gains that we see in tech stocks like in the Nasdaq or the S&P 500. And I think that's actually the maturity of Bitcoin. There isn't as much retail hype at the moment. And so it's with this kind of passive flows from institutions that come into play, Bitcoin is trading as an institutional grade asset, which I only think demonstrates its success. Now, we all would have wanted like a parabolic move this cycle, and that hasn't happened. As I said, like retail capital doesn't have as much impact. And institutions are only getting into the market in a more gradual manner. And so I think it's very likely that Bitcoin will continue lengthening this cycle as it is tied to the business cycle. And to get back to the liquidity chart that Andre that from Bitwise just in the previous slide, there is now this divergence with liquidity and Bitcoin. I also think that you have to take into account like the Treasury General account and so the Federal Reserve balance sheet and actually all balance sheet from the central banks because those also lock up capital temporarily, and so you get these kind of divergences in those charts.
I guess one of the other benefits that maybe doesn't feel like a benefit right now in the fact that we're having muted upside moves is it's also limiting the drawdown percentages that we're seeing. So there is some benefits to seeing this institutional passive flow into the market, as we said before, moving from speculation to stability. But a lot of market participants, especially within the cryptocurrency space, are maybe feeling a little worse off than usual due to the fact that Bitcoin has really taken the main spotlight. We're not seeing as much interest in alternative crypto assets. And I think, Ben, do you have any kind of insights on whether you think institutions are going to be more interested in these, or do you think that Bitcoin's going to reign supreme for even longer than it already has?
Yeah, I mean, I think Bitcoin will continue to reign supreme over the macro scale. Bitcoin dominance has been in a macro uptrend for years. What's really telling about the Bitcoin dominance chart is that the low, sort of the macro low, is actually set in late 2017, early 2018. And you could argue that despite all the money printing we had in 2020 and 2021, despite interest rates effectively at zero, and also despite the fact that the stablecoin market cap took up a much larger market cap in 2023, 2024 than it ever did back then, it's telling that Bitcoin dominance actually put in a higher low in 2022, despite all those theoretical headwinds to it. So to me, I think Bitcoin dominance has already gone from 38% to 66% this cycle. And my guess is the tailwinds will remain there. You have institutions more interested. I think monetary policy continues to favor Bitcoin as well. And I also think that this chart really goes to show that Bitcoin is more so a longer term investment, whereas other things in the space are more speculative, more short-term type moves. So I do think Bitcoin will continue to reclaim more and more dominance as the years go on.